Picture this. You're at a calm lake at dawn, and somewhere beneath the surface, you see fish. Big ones, the kind that could feed your family for weeks. Now, what's the worst thing you could do in this moment? Jump in the water and start chasing after the fish like a desperate maniac. Sounds ridiculous when I put it that way, right? Yet this is exactly what most traders do every single day when they open their charts. They're splashing around in the market, desperate, anxious, needing that win. And just like fish, the market can sense it, and it swims away. Every experienced angler knows this truth deep in their bones. You don't control the fish. You can't make them bite. You can't force them to swim to your hook. You can't negotiate with them or convince them or force them into biting. The fish do what the fish do. They move according to the current, the temperature, the season, their hunger, their instincts. They exist in their own world, following their own logic, completely indifferent to your bills, your goals, your dreams. All you control is your preparation. You control which rod you bring, which bait you choose, where you cast your line, what time you show up, whether you've studied the lake, whether you understand the species you're targeting, whether your hooks are sharp, whether your line is strong enough. That's it. That's the entire list of what's in your control. Now let's translate this to trading. You don't control the market. You don't control whether it goes up or down. You don't control volatility. You don't control when news breaks. You don't control institutional money flow. You don't control retail sentiment. You don't control geopolitics or interest rates or earnings reports. The market does what the market does, and it doesn't care about your mortgage payment. But here's what you do control: your strategy, your risk management, your position sizing, your entry criteria, your exit criteria. When you trade, what you trade, how much you risk per trade, your emotional state when you click that button, whether you've back-tested your system, whether you understand the asset you're trading. Most traders spend 90% of their mental energy trying to predict or control the market, which is the equivalent of standing by a lake trying to telepathically command fish to bite. The professionals? They spend 90% of their energy on preparation, and then they simply execute when conditions align. Think about the last trade you took. Be honest with yourself for a second. Were you thinking about your preparation, or were you thinking about the money you might make? Were you focused on whether your edge was present, or were you calculating what you do with the profits? Now, here's what separates experienced fishermen from beginners. The pros know where the fish tend to be. They're not randomly casting into any patch of water, hoping for the best. They understand fish behavior. They know that certain species gather at specific depths. They know that temperature matters. They know that time of day changes everything. They know the structures underwater where fish naturally congregate. They're not guessing. They're positioning themselves in the right zones based on knowledge accumulated over years. A beginner sees a lake and thinks it's all the same. A professional sees a lake and reads it like a map. They see the drop-offs, the weed beds, the temperature gradients, the current patterns. They know exactly where to position themselves before they ever cast a line. Now let's talk about what this means for trading. The best traders know where liquidity tends to sit. They're not just looking at price moving up and down randomly. They understand market structure. They see the zones where orders cluster. They recognize the patterns that repeat because human behavior repeats. What are they looking for? Liquidity pools, places where stop losses accumulate, areas where breakout traders will enter, zones where institutions have limit orders waiting, the spots where price will naturally gravitate because that's where the money is sitting. Now, watch a master fisherman and you'll notice something striking. They barely move. They're not exciting. They're not dynamic. They cast. They wait. They're present but relaxed. They've done this thousands of times. There's no drama, no urgency, no performance. Just calm, patient execution of a process they trust. They know something that beginners don't. The fish will come when conditions are right. Rushing won't make it happen faster. Anxiety won't improve the odds. The only thing that matters is being there, prepared, when the moment arrives. This is pattern recognition developed over years. They know what a bite feels like. They know the difference between a nibble and a strike. They know when to set the hook and when to let the line play out. None of this can be rushed or forced. It only comes through consistent repetition. Now let's talk about what this looks like in trading. The best traders I know are also almost boring to watch. They're not taking 50 trades a day. They're not glued to their screens with white knuckles. They're not celebrating or despairing with every tick. They have a checklist. Conditions either meet it or they don't. If they do, they execute. If they don't, they wait. There's no emotion in this process because it's been done so many times that it's mechanical. They've achieved something most traders never reach: emotional neutrality. Not because they don't care, but because they've decoupled their self-worth and their emotional state from any individual outcome. Think about that. They genuinely don't care if this specific trade wins or loses. They care about executing their process correctly because they know over hundreds of trades, the process produces profit. This is the compound effect of consistency. One perfect trade execution means almost nothing. 100 perfect trade executions means everything. But here's the trap most people fall into. They want results now. They want the big win today. They want to prove to themselves, or worse, to others, that they can do this. So they abandon consistency the moment it gets boring. They abandon patience the moment it feels slow. They abandon their process the moment they hit a losing streak. And that's when they've lost the game. Because the market doesn't reward urgency. It doesn't reward drama. It doesn't reward need. The market rewards people who show up consistently, execute their process, and have the patience to let probability play out over time. Just like fishing rewards the person who comes back to the lake every weekend for years, learning the patterns, refining their technique, building an intimate relationship with that body of water. Think about your favorite professional in any field. An athlete, a musician, a chef, doesn't matter. How do they practice? Frantically, desperately trying to prove themselves every single session, or calmly, consistently, refining their craft one repetition at a time? You already know the answer. So why would trading be any different? Let's keep going because this next point is where most people's understanding completely breaks down. Here's a truth that will set you free if you let it. Not every fish that bites gets caught. Sometimes the hook doesn't set properly. Sometimes the line breaks. Sometimes they're too strong and they get away. Sometimes you make a mistake in the fight and they slip off right at the surface before the net. Experienced fishermen know this. They don't spiral into existential crisis when they lose a fish. They don't question their entire identity as an angler. They don't throw their rod in the lake and declare fishing is rigged. They shrug, they analyze what happened if there's something to learn, and they cast again. Because they know there's always another fish. The lake is full of them. Losing one means exactly nothing in the big picture. This might be the hardest lesson for traders to internalize. Not every good setup results in a win. Not every perfect entry leads to profit. Sometimes you do everything right, and you still lose money. The market doesn't owe you anything for following your rules. It doesn't reward you for being patient. It doesn't guarantee that proper execution equals profit on any individual trade. And this is where most people break, because they can't accept that randomness exists even within a structured approach. They need to believe that if they do everything correctly, they'll win. And when they don't, they assume something's wrong with them or their strategy. But here's what's actually true. Trading is a probability game. If your edge gives you a 60% win rate, that means 40% of your trades will lose. By design, even when you do everything perfectly, those 40% aren't failures. They're not mistakes. They're not indications that your system is broken. They're literally just the cost of doing business. They're the fish that got away, and they mean nothing except that you're actively fishing. The losers are part of the system. They're not bugs. They're features. They're not problems to eliminate. They're simply the reality of probability expressing itself. Once you truly accept this, trading becomes exponentially easier. You stop taking losses personally. You stop questioning everything after a string of losers. You stop revenge trading. You stop trying to make back what you lost. You simply execute, track your stats, and trust that over time, if your edge is real and your risk management is sound, the numbers will work out. There's always another trade, always another setup, always another opportunity. Losing this one means exactly nothing. Now, There are days when a fisherman sits by the water for 8 hours and goes home with nothing. The conditions weren't right. The fish weren't feeding. The temperature was off. The pressure system wasn't favorable. Maybe there was too much boat traffic. Maybe it was the wrong time of year. Doesn't matter why. The result is the same: zero fish. Is that fisherman a failure? Did they waste their day? Should they quit fishing and take up golf? Of course not. They knew when they showed up that some days produce nothing. That's literally part of the deal. You can't control nature. You can only show up prepared and see what happens. But traders? Traders lose their minds on zero opportunity days. They sit in front of their screens and force trade because they feel like they should be trading. They take B setups and C setups because they can't accept that today just isn't an A setup day. They convince themselves that surely there must be something tradable if they just look hard enough. This is like a fisherman jumping in the lake and trying to grab fish with his bare hands because sitting patiently didn't work. Some days, the best trade is no trade. Some days, doing nothing is the most profitable decision you can make. Some days, protecting your capital and waiting for better conditions is the only correct move. But our psychology fights this. We feel lazy if we're not actively doing something. We feel like we're missing out if the market is moving and we're not involved. We feel like we're not real traders if we go a day without taking a trade. All of this is ego. All of it is self-sabotage. Professional traders are comfortable doing nothing when there's nothing to do. They're not paid by the trade. They're paid by making correct decisions. And sometimes the correct decision is to walk away, protect your capital, and come back when conditions improve. I track my no-trade days in my journal. Days when I wanted to trade, but my setup wasn't there, and I successfully did nothing. You know what I found? My no-trade days are just as valuable to my annual return as my winning trades, because every trade I didn't force is money I didn't lose. The discipline to do nothing is worth more than the ability to do something, because the market is always offering you ways to lose money. Every single day, there are 1,000 opportunities to make mistakes. Avoiding them is a skill. Here's the hard truth. If you can't sit through a full trading session without taking a trade and feel completely fine about it, you're not ready to trade consistently profitably. Because that emotional need to be involved will eventually cost you everything. Let me ask you something. When was the last time you closed your platform because there was nothing to do and you felt good about that decision? If your answer is never or I can't remember, you found your problem. The market doesn't care that you're bored. And boredom is not a valid reason to put capital at risk. All right, we're getting to the part that separates amateurs from professionals. Pay close attention to this. Specialization matters. Walk into any serious fishing community and ask them what they fish for, and you'll get specific answers. I'm a bass fisherman. I specialize in fly fishing for trout. I target marlin. I focus on walleye. They're not trying to catch every species in the ocean. They're not bouncing between freshwater and saltwater, depending on their mood. They've picked their niche and they've mastered it. They know the behavior patterns, the seasonal movements, the preferred bait, the best times, the ideal conditions. They've specialized. And because they've specialized, they're actually catching fish consistently. While the generalist is spread thin across a dozen species, the specialist is becoming an expert in one. This seems obvious in fishing, but traders constantly miss this. They trade stocks on Monday, crypto on Tuesday, Forex on Wednesday, futures on Thursday, and options on Friday. They're bouncing between day trading, swing trading, and investing based on whatever looked exciting that week. They're trying to catch every fish in every body of water with every technique simultaneously. And they're wondering why nothing's working. You cannot be good at everything. The amount of knowledge required to truly understand one market, one time frame, one strategy is enormous. The patterns you need to recognize, the nuances you need to internalize, the experience you need to build. It takes years of focused repetition. When you spread yourself across multiple approaches, you're guaranteeing that you'll be mediocre at all of them. You'll never get the repetitions needed to develop genuine expertise. You'll never build the pattern recognition that separates professionals from amateurs. Pick one thing, one market, one strategy, one time frame. Whatever speaks to you, whatever fits your schedule, whatever aligns with your personality, I don't care what it is. Just pick one and go deep. Become the person who knows that one thing better than 99% of people. Study it obsessively. Trade it consistently. Review every trade. Track every pattern. Build a relationship with it that spans years. This is how you develop an actual edge. Not by knowing a little about everything, but by knowing everything about one thing. I trade one specific setup in one specific market during one specific session. That's it. I know when it's high probability and when it's marginal. I know how it behaves in different volatility environments. I know the subtle differences between the versions that work and the versions that fail. That depth of knowledge is my edge, and I can only develop it through specialization. You think you're keeping your options open by trying everything. What you're actually doing is guaranteeing you'll never be great at anything. Be honest. How many different strategies have you tried over the past several months? If the answer is more than one, you haven't given anything enough time to actually work or prove itself. You're not adapting. You're just scattered. Bruce Lee said it himself. I fear not the man who has practiced 10,000 kicks once, but I fear the man who has practiced one kick 10,000 times. Masters are made through repetition of one thing, not through sampling of many things. Remember that. Now here's where we tie all of this together and talk about what actually matters. The money is in the preparation. Here's the truth we often forget about. The moment you stop chasing profits is the moment you become profitable. Think back to our fisherman. What is he focused on when he's at the lake? Is he staring at his empty bucket, stressed about how many fish aren't in it yet? Is he calculating the dollar value of his potential catch? Is he thinking about what he'll tell people about his fishing trip? No, he's focused on his line, on the water, on reading the signs, on his technique, on being present, on doing the thing correctly. The fish are a byproduct of that focus. They're not the focus itself. And this is the shift that changes everything in trading. When you focus on the preparation, on the process, on execution, on doing everything correctly, the money comes. It has to. It's a natural consequence of proper execution over time. But when you focus on the money, you lose the process. You start making decisions based on P&L instead of probability. You start thinking about what you could buy with the profits instead of whether your entry criteria are met. You start counting money that doesn't exist, yet instead of managing the risk on the trade you're actually in. And that destroys you. Because every decision made from a place of thinking about money is a decision made from emotion, from attachment, from need. And those decisions are universally worse than decisions made from a place of process and preparation. The money is in the preparation. Read that again. The money isn't in the predictions. It's not in the hot tip. It's not in the special indicator. It's not in the secret strategy. It's in the unsexy, boring, repetitive work of preparation. Preparation is backtesting your strategy until you understand its edge statistically. Preparation is writing a detailed trading plan and actually following it. Preparation is doing pre-market analysis to identify potential setups. Preparation is checking the economic calendar. Preparation is ensuring your risk per trade is appropriate. Preparation is having your watch list ready before the market opens. Preparation is reviewing every trade you take, win or lose, to extract lessons. Preparation is showing up every day regardless of how you feel. Preparation is treating trading like a craft that demands respect, not a slot machine that might pay out. And here's what happens when you shift your focus to preparation. Trading becomes sustainable. The emotional roller coaster flattens out. You stop attaching your self-worth to individual trades. You develop confidence that isn't based on recent results, but on knowing you're doing things correctly. The money stops being this desperate thing you're chasing and becomes this inevitable thing that flows toward correct process over time. I'll tell you when my trading transformed. The day I stopped checking my P&L during the trading day. I'd execute my trades, manage them according to plan, and then check results at the end of the session. My only focus during market hours became process execution. Everything changed. My win rate didn't change significantly, but my losing trades got smaller because I wasn't emotionally attached to them. My winning trades got bigger because I could let them run without fear. My consistency improved dramatically because I wasn't making emotional decisions based on how much I was up or down. The money didn't change. My relationship with the money changed. And that changed everything. Think about what you focus on when you're trading. Really think about it. Are you focused on the dollar amount in your account? Or are you focused on whether you're executing your plan correctly? Because one of those leads to consistent profitability and the other leads to an empty account and a pile of regret. Let's bring this home. So let me paint you two pictures, and you tell me which trader you want to be. Trader A wakes up stressed about money, opens their platform hoping today will be the day, sees the market moving and immediately feels FOMO. Takes a trade that kind of looks like they're set up, but not really. Gets stopped out. Feels angry. Takes another trade to make it back. That one loses too. Now they're in a hole and desperate. The rest of the day is a blur of emotional decisions and mounting losses. They close the platform defeated, promising tomorrow will be different. It never is. Trader B wakes up and reviews their plan. Does pre-market analysis. Identifies potential setups. Market opens. They wait. Their setup doesn't appear, so they do nothing. 2 hours pass. Still nothing. They're completely fine with this. At 11:30, their setup appears. They execute exactly according to plan. The trade plays out, hits their target. They take profit, update their journal, and close the platform. The entire process was calm, methodical, and professional. Tomorrow, they'll do it again. One of these traders is a fisherman. The other is someone splashing around in the water wondering why they're not catching anything. You don't need to chase profits. You need to become the kind of trader that profits flow to naturally. You need to become someone who understands that trading is about preparation, patience, consistency, and specialization. The fish don't care how badly you need them, but they will come to the prepared angler who shows up consistently with the right approach. The market is exactly the same. Stop trying to control what happens in the market. Start controlling what you do in response to the market. Stop obsessing about the money. Start obsessing about the process. Stop jumping around trying everything. Start specializing in one approach and mastering it. Be the calm fisherman at dawn, not the desperate person thrashing in the water. The profits you're chasing, they're already waiting for you, but they're not over there in the market. They're in your preparation. They're in your discipline. They're in your patience. They're in your consistency. Stop chasing them, and they'll start coming to you. If this resonated with you, drop a comment below. Thanks for watching.